Hi there, we're SC Tax, and I'm a chartered tax advisor, and I'm just going to speak today briefly about some of the interesting things that I saw at work. So, if you have a furnished holiday let or an Airbnb, from the 6th of April 2025, there's been a restriction in the mortgage interest that you are able to deduct for those properties. So, previously to that date, you were able to reduce your rental income or your property income by the mortgage interest that you received as an expense. Now, from that date, the mortgage interest still gives you some relief, but it comes in as a tax reducer. And the tax reducer is capped at 20%. So let's say you had £1,000 of mortgage interest. Well, if you're a 40% payer, that would come off your income prior to 6th of April 2025, which would give you relief at 40% of 1,000, so £400. But post 6th of April 2025, that will be available as a tax reducer at 20%. So you would only receive relief of £200. So the tax reducer reduces your tax liability by 200 rather than 400. So you're actually in that example £200 worse off. Now, what actions can you take to mitigate this? Well, you could set up a limited company and for any future purchases or move over properties that you currently own into that limited company. Although you have got to be mindful that when you do transfer ownership of a property in your own personal name into the limited company, you could have a disposal for capital gains tax purposes. If you have a husband and wife that jointly own a property, you can potentially split the income unevenly to suit you. Now, as a starting point, if you own the property 50-50 legally, the income will be distributed equally between husband and wife on their own individual tax returns. Now, what you can do is submit a Form 17 along with a deed of trust, unevenly splitting that rental income and not following the legal ownership. HMRC's rules will always follow economic and beneficial entitlement. So if you create a deed of trust stating that you're going to transfer 100% of your rental proceeds over to your spouse and you do not anticipate on receiving any of those rental proceeds, you can then submit that along with a Form 17, and the rental income will only be reportable on the spouse that has the economic and beneficial entitlement to that rental income, and legal ownership will remain the same. And these deeds of trust, they're not something you may want to use an accountant, but it is something you could create on your own as well. And HMRC would typically accept that as long as the wording is really, really clear on who has entitlement to that rental income. Anyway, if you've got any questions, we're still offering a free 30-minute consultation, so you can book in a strategy call with us if you do have any properties here at SC Tax.